Right, good evening guys, trust you all are doing fine. This is an all-round video, okay, summarizing all that has been taught during the last batch of classes we had for the year 2025, okay, good. So this is an all-round video, good. So first off, the beginning of that whole teaching batch, sorry, we did start with something simple, okay, which was introduction to market structure. I remember saying market structure was the way the market moves, okay? Simply the way the market moves. Nothing more, nothing less, okay? Now, market moves in three ways or can be classified or categorized into two ways, okay? We do have the uptrend that you know, the downtrend, and also the consolidating market, okay? Very, very much simple, just simple stuff, basic stuff. I just have to repeat it for the course of this video. Okay, good. And then we moved on to understanding what break of structures are, what market structure shifts really look like. Well, hold up. Looking up something. Sorry about that. Okay, what break of structures really look like. Okay, when price of an asset breaks past a swing low or swing high. Okay, we term that as what a break of structure. When you have things like this. Where my screen up? My screen kept on going off. I have to reset the timer. When you have price doing this, okay, uptrend in series of highs, high lows, and then you see price doing this one downtrend series of lower highs, lower lows. The process creating a break of structure and the whole rest. Okay, this is very, very simple stuff. I don't expect you to have issues here. Good. So moving on. Now, I still thought about break of structures having what? A market structure shift. Okay, when you see price changing from an uptrend to a downtrend, is either one of these two happen? Is either it comes with a change of character or a market structure shift? Okay, does it come with a change of character or it comes with a market structure shift? Now, when it comes with a change of character, here's what's gonna happen. Let me draw something else. Let me draw something else. Okay. Now, here's what happens when it comes with a change of character. You're greeted with higher highs, higher low, higher low, higher highs again. And then price just does what? Boom, sweep. And what does it do? It comes back to tap on this break of structure. Yeah, okay. Remember, be it to the upside, downside, it is a break of structure. Good. So market comes, taps into it, and continues going. Okay, continue to go. Now, the point where it just taps here, okay, when you see this kind of thing, market did what? It not shift structure, but rather what? It changed character. But now let me then show you what it means for markets to shift structure. This is the market structure shift. This is the market structure shift, okay? Before you even start pulling down, you have a little pullback, okay? The lower high and lower low scenario starts from in, and then it comes out. And what does it do? It doesn't tap on here, or rather goes back deep inside, okay? Probably to pick this or within and continue moving down. Now, when you see this kind of pattern, you know it's what? It is definitely a market structure shift, okay? It's definitely a market structure shift, okay? So you have chalk, break of structure with chalk to the left, break of structure of MSS to the right, okay? MSS to the right, okay? Good. This is an MSS, market structure shift. Very convenient. And we have what? A chalk. Good. Good. Let me take a quick picture of that. Let me take a quick picture. Hold on while I extract this picture out. So I won't forget, because if I leave that picture there, I'm definitely gonna forget. Okay. Now let's move on. All right. Moving on. Now we moved on to something different. Okay, we started moving deeper into order flow and the rest of them. Okay, started getting to know what order flow was all about. It's a very, very, very simple something. Okay, what order flow was all about. Well, let's move. So moving on, let me go back up. Order flow is actually something very, very simple. Okay, good. And in simple terms, order flow is just the real time buying and selling activities of the market. Okay, it's actually trying to tell you who is in control. Okay, it reveals where price is simply going to. Okay, it helps you reveal the liquidity grabs, liquidity run, and the rest. Okay, it's just showing you who is in control of the market. Is it the buyers? Is it the sellers? Are you in an uptrend? Are you in a downtrend? Okay, good. Now we then have bullish order flow. Okay, when you have series of higher highs and higher lows being respected in a proper uptrend. Okay, BOS to the upside and all that. Okay, and you see price keeps moving up. When you see price doing things like this, you will still respect the breaker block pattern, continue going up, comes back, does advanced market structure, keep on pulling up and all that. Okay? Proper order flow. You know that yes, buyers are in control, structures are being respected. And for the opposite, that's where we have the bearish order flow. Okay? Good. And when you now start have signaling a change, you start seeing a change, a chalk or MSS, you now know, okay, that's when you now say, okay, yeah, this is temporary, this is long, okay, this is longer, this permanent change, okay. All is still temporary, because in the end, market will not keep selling forever. But then, you know that market structure shift has signified that yes, it is going to last in this stuff for long, okay. Market is going to be selling for a while, okay, because there's a proper target down. But chalk might just be a short target and just takes it and move back up. Okay, good. We then talked of point of interest. Okay, we saw our breaker blocks, order blocks. Okay, mitigation blocks. Okay, I don't really trade mitigation blocks. I don't trade mitigation blocks. Not if I'm not really a fan of mitigation block. I think my win rate on mitigation block is just about I think it's a 50-50 something. It's a 50-50 something. Am I recording? Yeah, I'm recording now as much. Wait, hold on, let me verify. Okay, yes, I am recording. All right. So breaker block actually, let me start with an order block, okay? Another block, as people will always say, the last opposite candle before the opposing move and all that. Now, let me just head to the chart. You all know what another block is. Now, another block is the last candle that pushes momentum, okay? The last ride of either bearish momentum, a last ride of what's it called, bearish control, before you now have bullish momentum. Okay, good. There's something I noticed in the market lately concerning other blocks is that you see other blocks that move, that immediately after them you then see consecutive opposite candles of over four or so. Okay, meaning if you have a black here, just like my chart use black to show sellers in control. You have black here. Okay, my student people know this morning style that block good. And you know why I marked here. Now, immediately after this black, you saw buyers took control. How many this thing? 1, 2, 3, 4. You can see. And amidst them, you have high candles. Okay, you see you have candles with high volatility, just like this. And when the inducement, when it came back, created an inducement, you still see that high momentum, high volatility in the market. Okay. Your signals, this other block is a strong one. Okay, good. That's one of the things I look out for lately. If you see most of my trades, you know that, yeah, I've been looking out for this thing for quite a while. Most of my trades, you hardly see me pick a trade at the other block. You won't see consecutive candles of over 4 or 5. Okay, so I can do that. It's the last ride before momentum sets in. That's what I consider as my OB. Okay, good. Combined with my perfect inducement, I've seen a break of structure. My price rides back into my zone. I'm good to go. And mind you, there must be a sweep of liquidity. Okay, price must first sweep liquidity leading to your POI. Okay, good. It sweeps liquidity around here. Okay, you have my sweep. I have my break of structure. Moved up, came back down. Okay, good. It's gonna come back down, right? That's too much confidence in this setup. I've had this for about a week. I think when I mapped it, it was around here. I think, okay, yeah, 23rd of December. So it's over a week.
The
Over
comment
a week.
section.
I'm gonna check the comment section, okay? Next time, just raise your hand, please. Okay, concerning the other block, it's basically what I taught you, okay? But now I'm saying when you're looking out for other blocks, what we call high probability other blocks, tempted by me, though. That's what I see as my high probability other block. Now, this is out of observation in market, okay? Other blocks that immediately after them, you see strong momentum. So you have the bearish momentum dying here. Sellers got weak here. And what did you see? Buyers taking control massively. You have more than 4 candles, okay? You have 1, 2, 3, 4 consecutively just push up. I'm not saying there won't be other blocks that don't, other blocks without all those consecutive things will not hold. No, they would hold. But then I've seen this kind to be stronger. Okay, good. So look at this place. Let's look at here. This was last opposite can you see that price tapped on it? And if you check consecutively, it's not as if there was a bullish candle here. Look at it, there was bullish. But then you can see that if you check the whole 6 candles, 5 out of the whole 6 still buyers in control. So what do you expect? That when price taps it, well, it keeps on pushing up. Okay, as simple as that. Okay, good. So that's what I've seen that over time it holds perfectly. Can you see here? You have 1, 2, 3, 4, 5, 6, 7. You have 7 candles, and just one is what? And just one is bearish amidst all. Even if you mapped your whole this thing, your SL should be below this week. Okay, you can still see that price came backwards, give you a re-entry, and still move. Your target will be at this week, and what the price will clear out this week. So as simple as that, okay? And moving on, we then had breaker blocks. I showed you our type A, type B breaker block, okay? Good. Showed you our type A, type B breaker block. Okay, your breaker block, what differentiates it is the way the sweep of liquidity is, okay, compared to a mitigation block. So you have your breakers like this. You have your breakers like this. Okay, good. Price comes, moves. Or you have this. You have this. That's the type A. This is the type B. I did term them type A, type B, okay? To differentiate them for my students. Good. Now, this depends on where the inducement is placed. So sometimes when you see that price breaks out and the next candle on within the next 3 candles just come back and tap into this zone and push up. Okay, when price is coming, price will look for an opposite candle along this line or an inner breaker block and do what? So when you see it has been mitigated, guys look for an inner breaker block around here and just move. Okay, guys will use that one and move. Okay, that is why I differentiated them. Okay, good. Let me modify this. Okay, guys will just use this one and move. you have this and you have this. Sometimes it even takes from this sweep here. Okay, good. But most times you do have an inner breaker at this point, and price just picks it up and moves. Okay, so let me term this A and B. Okay, good. So you have type A, type B for both of them. Great. Okay. So let's take a picture of that again. Let's take a quick picture. And let's extract it out. I don't want to leave any and say I forgot to do something. I don't want to forget. Great. Okay. And now for the mitigation block, it's quite the same. Okay. But then we won't have the sweep of liquidity to it. Okay. Price just comes off a, what is it called? A support. Okay. So price comes up a support. But for the entry type, it's still the same way. Okay. The inducement here will determine it. Okay. So this might just happen almost immediately, like I said. The inducements here will determine it. Okay, good. Whether this inducement tapped into this, the breaker. So here it did not, here it did. Okay, good. So this is it, but I do not trade mitigation blocks. Don't say it's because of me you refuse to trade mitigation blocks, but then I do not trade it. Okay, but I've seen I'm not that. I understand the concept, but I've not taken time to study on it. Like, how would I say this? I'm not taking time to study on it, study the pairs it works on mostly rather. Okay, there are pairs out there that mitigation block is the main mode of movement, but I've not taken time. Okay, compared to the way other block is that common and breaker block. Okay, so I'm mostly into trading breaker, other blocks, and optimal trade entries. Okay, good. So that's it for that's it. That's it. That's basically it. Okay. So moving on, we then went on to talk on advanced market structure. The patterns of advanced market structure we have noted are type A out, type B, type C. Noted are type A, B, and C. Put this here. So we noted our type A to be like this. Very, very beautiful structure. I think there's a trade I'm waiting on. Okay. Then noted type, type B. Type B has a small breaker in. So now can you see that that trade I picked, so that we probably reacts from inducement a bit and move up. Can you see why I picked that Euro JPY trade now? We're going to go back to it and compare it to the type B. And then we have our type C, okay, where liquidity is engineered. Another mistake. I don't know. I didn't. Sometimes during these patterns can be quite really good. Okay? So we have your type A, type B, and type C of advanced market structure. Okay? Type A, type B, and type C of advanced market structure. A, A, B, C, D. This is a song we used to sing then. I think it was popular on TikTok. Good. Okay? So this is what our advanced Ma, it's sure. Much I love the advanced market structure before. Now I'm more a fan of more into breakout blocks compared to advanced market structure. Compared to advanced market structure, I love breakout blocks more nowadays. I was a huge fan of advanced market structure. If I don't see advanced market structure in that trade you are showing me, nothing to me. But now, okay, so can you see? Can you see before it went to break? Can you see the sweep for comparing to type B? You can see that pullback inside here and win. I'm expecting price to come and react off this and come to my zone. So can you see why I picked this zone now? Can you see? Good. All right. So after that, we then moved on to liquidity. All right. We then moved on to liquidity. What's your how trendline liquidity works? I'm not really gonna be talking much on it. What's your how trendline liquidity works? Trendline liquidity is something that overrides any other thing in trading. If you are trading within a trend line, you have price doing something like this, bouncing off a trend line. Let me reset this. Today I was almost caught up in a trend line. I think it was on was it jump 50? That happens to be my favorite there. I was almost caught up in the trend line. But I spotted it very, very much clear. I was like, I had to remove my limits. The half price doing something like this. Price comes back. Well, the target will be the end. Okay, good. That is where you place your targets for a trend line. Your trading trend line. So mind you, you're going to be seeing sell POIs within here, reasons to sell. You might even see advanced market. This is where advanced market structure used to come out well, very, very lovely, very juicy trades. But if you short for you, take out. God in heaven, I'm going to meet you. Rule number one, don't fall for trades. Always look, am I in a trend line? Am I safe on this trade I'm embarking on? Okay, good. We have the same thing. So mind you, trend line overrides anything. No matter how correct you see your trade here, it will react from your trade. If your trade is very, very perfect, let's say you see something like this Euro JPY trade, a clean advanced market structure, it will react, but it would not hit your TP. In my old trading career, just once I've seen a trade react, hit the TP, intended TP, and it still came back to this zone and moved. Came back to the entry and moved. That was the only time I remember that was volatility 50 index. That was around June or May 2025. I remember very, very well. It was a Sunday about 12 to 3 p.m. I remember very, very well. Very, very, once I enter charts, I remember the days and these kind of things that happen. Okay? So that's the only time I've ever seen some price respect something around here and still come back. Although he still respected the trend line, but for you to respect that, it doesn't mean it's going to happen during your time. No, do the right thing when you're trading. Okay, good. Do the right thing when you're trading. Don't go and be caught up in this and say Forex doctor told you this. It's not me. And then we have the Fibonacci concept. Okay. Okay, I told you guys of how our premium and discount zone works. Okay, good. So let's say you can use your Fibonacci to test for your inducements first of all. Okay, you can use your Fibonacci to test for your inducements. Good. You can also use your Fibonacci to get entries into your trades. Okay, good. So when you are trading an asset, price moves from swing high to swing low. There are many ways. Let me highlight let me highlight something. swing low, swing high, swing low. Good. Okay. Price. Now you can use price to test something like this from swing high to swing low. And you can see you have your premium zone to be 0 to 0.5 and discount from 0.5 to 1. Now, you buy at discount, you sell at premium. Okay, good. Buy at discount, sell at premium. If you are using the sell side, you turn it the other way around. That is how I do my own. Okay, to still know that you buy at discount, you sell at premium. You buy at discount, you sell at premium. Buy at discount, you sell at premium. So it's safe to sell around there. If you see sell setups here, you take them. But if you are seeing juicy buy there, it is overly risky. Okay, this thing worried me as a beginner. When I was trading as a beginner, I refused to listen to this particular buy at discount, sell at premium stuff. Okay. So yeah, let me start rounding up. Okay, so when you are from, and there's a place called golden zone from 0.6 to 0.786. Okay, good. That is where you are to be caught buying. So when you see setups like this, your advanced market structure forming around here, it is safe to take them, especially when the entry points now align to 0.6, 0.786. It is safe to take them. Okay. Those chances, that's where I won't take risk. And to test for inducement, the break of structure, okay, that caused the inducement, you test from down here, from a protected low to this break of structure where the inducement was. Okay, good. So entering like this, looking for trades within this golden zone is what I called optimal trade entry. If you remember the beginning of this class, good. So putting this here and see that your inducement, if your inducement comes below into the 0.618, it's a good trade, especially when it now aligns with something like this. So you can see, I taught you how to test for inducement, how to look for the whole trade, okay, when you are caught up in a swing high, swing low. Good. I've showed you that. And then when you're entering now, when moving here, if you are not entering maybe from your POI, we're using confirmation entry, and your confirmation entry forms around the 0.6 to 1. It's a very, very good trade. Okay? It's a very, very good trade. Very, very good trade. Okay, so that's Fibonacci test for inducement. And this is what optimal trade entry, OTE. Please mute your mics in my class. Nobody is permitted to on a mic in my class, please. If you want to ask a question, you can ask in the DM. Sorry, in the comment section, and not in the video, please. And when it's time for questions, or when it's time to on your mic, I'm going to be informing you. Okay? Good. My host a separate class for questions. That means I'm going to be sending another link. But for now, please and please mute your mic. And then we talk about top-down analysis, okay? I will break down. I'm not going to be stressing more on this, okay? I will come down. This basically explains this. So you're on a higher time frame, let's say 4 hours or daily, you're having this. I basically explained it here. You start looking for your 4-hour setup on here. And when you come down, when you've tested inducement and all that, maybe on a 2 hour or something, you're using 15 minutes. That's when you start looking for entry forming around there. Simple as that. Okay? It's not hard. And for entries, those same advanced market structure patterns, you might see them here. Save. Okay, you can use your advanced market structure for entries. You can use your optimal trade entry, something like this. Just see it calm down and you see it perfect. You can use breakout blocks, mitigation blocks as entry confirmation. Okay, they are the best format of this thing. And for stacking, lately I don't advise my students stack. Okay, leave stacking. That urge to make quick money, I want to kill it in you. I'm building disciplined traders, not people looking for fast money. Okay. And now, last thing we talked about was, I've talked on psychology. I've dropped voice notes on psychology. I'm not going to be going into psychology. It was risk management. Okay. I taught you guys dynamic risk management, advanced risk management, about 3 systems of risk management. Okay. Good. And let me just explain dynamic risk management. It is something very, very much simple. Okay. It's something very, very much simple. Now let me be using I'll be using a prop account. No, let's use a normal account. It's something if you're wise, you can still um okay. Sorry, I'm getting a message. HTNFX. Okay, let's move on. As I was saying, risk management, that's why I don't like getting distracted in class. Okay, for risk management, it's simple. Okay, that dynamic risk management rather. So let's say you have $500 in your trading account. You have $500 and you're trading with $500 as a capital as your capital. Okay, I'm not good that before I use prop. Let me use real money now to explain. 500. Now, what are you going to do? Divide it by 10. Okay, to be on a much more safer side, divide it by 20. Okay, it's good. 20. 20 is good enough to even divide it. Now, meaning you have 20 trades. 500 divided by 20 is about 25. Sorry, 25. So you have $25 per trade. If your target is 1 to 4, you are very, very good to go. So if you hit your first trade hits TP, you're making $100. $100 plus your 500 is not 600. You have gotten what 20% of your account. If that's what you get in a week, see, it is very, very most companies don't even make 20% a week. Okay. So it is it's a very, very good return. If that's what you're even making, maybe you're doing twice in a week, maybe or so, you're having about 20-30%. It is very, very decent. As simple as that. One good trade. I'm not saying there might not be tons of good trades in a week, but then be strict. Okay. Know when it's time to go when you're winning. Know when it's time to go when you're losing. As simple as that. And if you lose that first trade now, what you're going to be left with $475. Now that 475, that's why I like working by 10. You can still divide it by 20, okay? If you divide it by 10, it's going to be 47.5, okay? But then by 20, it's going to be around $23 or so. So you still divide it by 20 again. So you still have 20 trades more to go. You move it. When you now move, but when you trade it, you're going to be using $23. Now, before you're using 25, but now because you lost, you're using 23. So you can see how you move back down. So if you lose again, you divide your balance by 20, use your 1 to 4 again. So you grow and come out from this 500, come back to this 500. You adapt to your main playing this thing. Okay, you might have 510, fine. That 10 might be an additional something to just cover. You still stick with that your plan and move. By the time you've gotten up to 250, if you want to withdraw, you withdraw, something like that, you now have 50% of your account. If you want to be doing $30 per trade, fine or something, okay? But that is how this dynamic risk management goes. Ask yourself, am I dividing my trades by 10 or by 20? Can I do something good with 10 trade opportunities? Can I do something good with 20 trade opportunities? So if you lose, you divide your balance by 10 and or by 20, and that would become your SL or your 1R, okay, for a trade. Targeting 4-5, okay? 4-5, okay? As simple as that. Be very, very perfect. So there was a friend of mine, he's the one that just messaged me now. So I see this thing, you guys very, very be like, this guy, I think he hit a trade on BTC. It was last week or so. That was what he replied to now. This 71.5 RR. I'm going to send the screenshot to the group later. Somebody should remind me after this class. I was even discussing with my inner circle on this. I was like, oh, this guy Nabado. 71.5 R. Meaning if you risk $10, you're making 710. So imagine if you stack. He uses a very, very lovely strategy, which I trade, and which is going to be, which I'm still remodifying, okay, to be simpler for you guys, and which will be taught in my next batch of class, okay? Good. So now let's talk about our next batch of class. Now, here's what you're going to be getting for that class, okay? Deep market structure mastery, okay? So that is, I'm going to be posting this video on YouTube and TikTok. That is why I'm mentioning this. Good. That's why I'm mentioning it. Not for you guys that are in this current batch, okay? Not for you guys. If you want to still hang around with Forex Doctor, fine. Your fee is definitely going to be lesser, okay? But that's why I'm talking about this. Good. Now, what you're going to be getting is deep market structure mastery, clear entry models, okay? Liquidity and institutional concept. Everything I explained here, they are going to be getting a refined version of it, okay? This is just a summarized stuff. There are more to it. There's going to be weekly outlook. There's going to be reading club, okay? We're not just teaching you how to trade, we're helping your life, fixing your life, doing something better. Classes are going to be twice weekly, and reading club days are going to be twice weekly also. While Saturday, you're going to be having weekly recaps. And along the line, some days you're going to be having webinars, Twitter spaces, and all that. So all around, all the whole week, you're still going to be busy learning, improving your life, getting more disciplined. Your psychology is going to be straight. Okay, good. So that is that. Okay, for the wrap up class. Okay, that is that for the wrap up class. Okay, great. So do have a good time. And yes, if you don't understand any concepts, feel free to hit me up on my social, all at Forex Doctor or Dr. Divine Favor, any of them. Okay, so good night.